Well, yeah, so much for the markets rallying as the bulls were hoping for. Donald Trump's tariff announcement today sends stocks into complete freefall. Donald Trump says there's no room left for a deal on tariffs on Mexico and Canada. Donald Trump confirms that 25% tariffs on Canada and Mexico will start Tuesday. That is technically tonight at midnight. The hope for the markets today was the tariffs would be reduced to 10 or 15% with some kind of deal worked out. Doesn't look like that's happening. Trump also reiterates that reciprocal tariffs will still start on April 2nd. And Trump reiterates the plan to double China tariffs to 20% from 10%. Trump says that he will consider a free trade agreement with Argentina. And Trump says that he will penalize countries weakening currencies with tariffs, specifically mentioning the yen when talking about that. And then Trump adds that further China tariffs above 20% really depends on retaliation. If China retaliates against the US tariffs, that the US will retaliate back. And as soon as these announcements were made by Trump, Canadian Foreign Minister Jolly says Canada is ready to put tariffs on $155 billion worth of US goods. The Canadian Foreign Minister goes on to say the first tranche of Canada tariffs will be on $30 billion worth of goods. Donald Trump says he does not think China will retaliate too much, causing some of the downside that we have seen in late trading today. Trump says tariffs will go on external products April 2nd. This is on external agricultural products. And also in bad news today, Israel will resume the Gaza war in 10 days if the impasse persists. And OPEC Plus announces that they will proceed with output hikes beyond April. And this did lower oil markets today. Oil fell about 2.5% on this news. Great news for inflation, but you also wonder how much of this could be due to the recent weakening in economic data. This morning, we did get ISM manufacturing PMIs that came in just really bad across a couple different specific metrics here. The headline number didn't come in too terrible. It did miss expectations, coming in at 50.3. The estimate was 50.5, but only a slight miss there. But under the surface, it looks much worse. Manufacturing employment came in at 47.6. Last month was 50.3. The estimate was 50.6. So that was a big miss. Look at that. Construction spending month over month, negative 0.2%. Expectation was 0% or even as high as positive 0.3%. Last month was positive 0.5%. So that's really bad. Manufacturing new orders came in at 48.6 versus estimates of 55.4. That was a massive miss. And manufacturing prices came in at 62.4 versus estimates of 55. So that missed to the upside. So higher inflation in manufacturing, weaker activity. Not exactly a great setup for markets, and that's what initially caused the weakness this morning. Fed Musolium says there are good reasons to think that productivity growth is persistent. Fed Musolium says restrictive monetary policy still needed to ensure inflation returns to 2%. But look at that. Fed Musolium says, quote, outlook is for continued solid economic growth, but recent consumer and housing data pose some downside risk. First time we've really heard a Fed official say that, yeah, the economy's weakening. I mean, after all, the latest Atlanta Fed GDP Now tracker for Q1 is now negative 2.8%. Now, the Atlanta Fed GDP takes essentially the latest data point and extrapolates that, okay, and makes a prediction saying basically if all the data comes in like the data we got today, we're going to be at negative 2.8% GDP for Q1. This number will come back up. But the deeper negative you get, the harder it is to see a strong GDP print for Q1. So either way, even if we're not negative, which we very well could be, it's not going to be 2% or so as kind of everyone was forecasting. And again, Fed Musolium says recent data suggests downside risk to economic growth. And Fed Musolium says signs inflation expectations unanchoring would concern him. And the SEC is now dangling a $50,000 incentive for employees to resign or retire. If you were offered $50,000 to quit your job, would you take it? Trump says that America will not put up with the war in Ukraine for much longer. This follows comments by Zelensky that they want to end the war as soon as possible, but it looks like they're not even close to ending the war. And there's more talk about Trump potentially ending all military assistance to Ukraine. And U.S. Defense Secretary Hegseth tells all civilian defense staff to reply to the Doge email. And this was some of the hesitancy markets faced in the beginning of trading today. It says the Trump administration has not, as of this moment, reached out to formally notify Canada that tariffs are coming. They don't have to, but they have done this in the past. Senior Canadian government source cited by CBS correspondent on X. And U.S. Commerce Secretary Lutnick says Trump wants automaker manufacturing jobs back in the U.S. U.S. Commerce Secretary Lutnick says Trump will have to decide on tariffs this afternoon to be announced tomorrow. And honestly, what I think is happening here is, with the 25% tariffs, Trump has kind of preconditioned the markets to be happy with 10% or 15% tariffs on Canada and Mexico, and that looks to be the direction that we're probably headed in. And it was also reported that Trump will have to decide on tariffs Monday afternoon. They are set to go into effect tonight at midnight. And at least at the time of recording this video, it is a pretty ugly day. The Dow is down 345 points, down 0.8%, S&P down 0.86%, NASDAQ down 1.32%, the Russell 2000 down about 1.4%, the VIX also up 8% today to 21.16. So the VIX continuing to break out as fear continues to build, and that just really means people are going out and hedging portfolios. And here on the day today, 10-year Treasury yields are trading lower by about 5.5 basis points, down to 4.176%. I think a lot of this really just has to do with the weakening economic data. And really, we haven't even seen anything yet. Now, of course, today is off to a pretty crazy start for markets, but this week is really going to get even crazier, obviously, with whatever happens with tariffs. But on Wednesday, you have services PMIs from the ISM, you have more Fed speakers. On Thursday, you're going to have initial jobless claims, exports, imports, balance of trade. You get a new GDP update from the Atlanta Fed. Fed Bostic, other Fed speakers on Thursday. And then on Friday is really the big day. Non-farm payrolls, unemployment rate, Fed Bowman, Fed Williams, Fed Kugler, and Fed Jerome Powell will be speaking. So yeah, this is going to be a very volatile week, to say the least. Here on the day today, the CNN Fear and Greed Index did rally sharply from what you had on Friday, which is interesting considering markets are down again. The previous close you had was 19. Let me just refresh this, make sure we have the most up-to-date data here. Previous close was 19. Now you're at 27. So you jump from extreme fear, now in fear. Pretty close to extreme fear nonetheless, but this does potentially pave the way for more downside. If you fall further from here, you could fall back into extreme fear. That's something to keep your eyes on. Now, here on the day today, the percent of stocks trading below their 50-day moving average falling down to 39.7%, down about 2% on the day today. And markets are still pretty damn bearish. And obviously, you guys already know that the overall fear in markets, you really haven't seen this much fear since the bottom of the crash in 2022, when everyone thought we were going into a recession and the S&P was down 27%. In fact, on average, when you are this fearful, the S&P is down over 25% from all-time highs. So this is like an anomaly with the S&P down 3-4% from all-time highs. Kind of strange, but it just goes to show how bearish people are. Typically, this is a contrarian indicator. Normally, you want to be buying when people are this bearish, but this time around, I think you really want to be patient and selective with what you're buying. A stock like Tesla that's down 40% from all-time highs could be a very good buy here. The S&P down 3% from all-time highs, yeah, it's just not very attractive to me. Now, we do have some notable earnings as well this week. Today in after hours, you have GitLab. That's the one that I really want to pay attention to. Mid-cap AI name. Google owns about 10% of the company, so definitely want to pay attention to that one for the AI software trade. Tomorrow, pre-market, Target and Best Buy are going to be the big ones, really just to judge the state of the consumer. Tomorrow in after hours, CrowdStrike, Box, and Ross. Again, Ross, judge that consumer. Same is true for Wednesday pre-market, Abercrombie & Fitch, Foot Locker. Wednesday and after hours, Marvell, Rigetti, Zscaler, MongoDB, Viva, Victoria's Secret, and others. Thursday, JD.com, Cracker Barrel, Kroger's, and then Thursday in after hours, Broadcom, Big Bear AI, Costco, Gap, and others. As far as the biggest expected movers from this week's earnings, you have GitLab today, 15% plus or minus. Target, Best Buy between 9 and 10%. CrowdStrike as well, around 10%. Ross at about 8%. MongoDB, Wednesday, 15% up or down. Marvell about 13%. Zscaler 12%. Viva 9%. JD.com 10%. Broadcom at about 10%. Costco down here only at about 5%. And Kroger at about 6%. Now tomorrow, as far as your economic data, we're really not going to have much. You have the RCM TIPP Economic Optimism Index coming out at 10 o'clock in the morning. Again, some of that confidence measure we want to see improve for the bulls. The bears obviously want to see this get worse, expecting this number will get better from last month's number of 52, expecting this to rise to 53.1. So expecting a little bit of improvement. And then Fed Williams speaks at 2:20 p.m. tomorrow. But I think tomorrow could be about the tariffs, what is announced later today, what is implemented tonight, if there is a delay, if there is a lower tariff amount, maybe it's not 25% on Canada and Mexico, maybe it's 15%. That could actually be seen as a positive for the broader markets. But again, we don't know exactly what that's going to look like until we know, and we don't know how the markets are going to react to it until it happens. But I do imagine if we only get, and I say only, a 10 to 15% tariff on Canada and Mexico that is on everything, that is probably going to be taken as good news by the markets, and it wouldn't surprise me if stocks did continue to bounce, or at least trade sideways, maybe bounce this 50-day moving average on the SPY, and your highest beta stocks for that matter would probably, do what they typically do and bounce a lot more than broader markets. But again, I'm only speculating here. Maybe it's 25%. In that case, that would definitely be negative for markets. And now markets are pricing in the first Fed rate cut June 18th, 2025. But by the end of this week, you could be pricing in a cut coming as soon as May. If the data is really bad, it could be by March. Now, the odds of a cut for May is, this is really what you probably want to be watching at this point. The odds of a cut sit at 35.3%. The odds of a continued pause sit at 62.7%. If we continue to get bad data, May for a cut is going to be on the table, because March 19th is the next Fed meeting. You basically skip over April, and then you go to May. So it will be fascinating to see how pricing evolves for March, but there's only a 6% chance of a cut March 19th. And I think that has a lot to do with tariff uncertainties that the Fed really has, and how that will affect inflation. But as notable investors like Fundstrat's Tom Lee has recently said, tariffs are probably going to be deflationary. They're probably just going to be bad for the economy and not inflationary as most people are expecting. Now, when I look at the S&P, today's price action was definitely nasty, and you could very soon be at this 200-day moving average. I think the big question is for markets, how is the economy going to evolve from this? Everyone kind of thinks tariffs are inflationary, but the bond market disagrees. TLT today rallied as the market sold off. Now, part of that has to do with TLT being a hedge. the 60-40 portfolio, usually when stocks go down, bonds go up. When bonds go down, stocks go up. That's why there is the 60-40 portfolio. 60% stocks because stocks tend to outperform long-term, and 40% bonds. Now, that correlation is playing out today. And the rise in TLT, the falling of 10-year Treasury yields, suggest that investors may be growing more concerned about the economic impacts that tariffs could have on the economy, especially following some of the weaker than expected economic data in recent days. What's also fascinating today, Nvidia is down about 8.5%. But look at SMH, the semiconductor ETF. This thing is well below its 200-day moving average, 50-day, 100-day moving average. Like, this thing is plummeting. I mean, the last time this happened and you broke below your 200-day moving average was in January of 2022. And when you broke that, you ended up falling about 38% for this ETF. I mean, that's rough. You're only down about 10% right now. So if that were to happen again, you could see the SMH around 154. Suggesting that maybe semiconductors are leading the market decline. And this would suggest that, 10, 15, 20% correction could be in the cards for markets. But again, it really depends on the economic data, whether it looks like the US economy is heading towards a recession or not, like we've seen in 2022. You do not need a actual recession to get a large decline on markets. I mean, just the data pointing towards a recession can grow fears and push stocks lower. And trust me, we are nowhere close to priced for a recession. So that is the big thing that we need to be on lookout for. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.